I didn't hear that. Yes? Oh.
Yes.
Being live streamed. Okay.
We're live.
All right. Let's, this is the Finance and Audit Committee meeting for December 14th. Teresa, or December 4th, 2023. Teresa, will you take roll?
Absolutely. Mr. Gordon Cook.
Here.
Mr. Robert Johnson.
Here.
Dr. Yummy Pandolfi.
Here.
Ms. Michelle Wyckoff.
Here.
We have Mr. Ronald Dees. We have a forum.
Okay. All right. You have the agenda. I sent that out yesterday. Can I get a motion to approve the agenda?
I move the.
I'll take that as Michelle. Bob, was that you? Is it? You want to second that?
Second.
Okay. I should say, are there any changes to it? Anybody's comments? If none, Teresa, will you take the vote?
Mr. Gordon Cook.
Yes.
Mr. Robert Johnson.
Aye.
Dr. Yummy Pandolfi.
Aye.
Ms. Michelle Wyckoff.
Aye.
Motion carries.
Okay. The minutes were posted. I read them, didn't have any changes. So I'll ask for comment, and if none, then I would ask for a motion to in a second to approve the minutes.
I move the minutes be approved of the November 9th, 2023 meeting.
Okay, second, this is Yummy.
And if no changes, then Teresa, will you take the vote?
Mr. Gordon Cook.
Yes.
Mr. Robert Johnson.
Aye.
Dr. Yummy Pandolfi.
Yes.
Ms. Michelle Wyckoff.
Yes.
Motion carries.
Okay. First item on the discussion agenda is the Harvey Jones building, and I'm going to let you pull up pull up a document. There are a couple documents. If you didn't look, there's one just showing all right, do I need to get rid of this X? Maybe.
Cody, can you still hear us?
I can. It looks like Trustee Cook fell off the meeting. Let me email him. Oh, he's coming back.
Oh.
Let me.
All right, I'm back.
Okay, welcome back.
Don't hit an X on the screen. So, all right, there are a couple components. There are a couple documents up there. I'm going to let Aaron take the lead on this. One is showing the cost of $55,000, and there are some other documents that showed just the physical layout. And so, Aaron, I'm going to turn this over to you.
Sure. So, thank you, Gordon. In the Buildings Committee, we presented a proposal to demolish the Harvey Jones building, which sits on the property of the North Independence branch. In board docs, aerial views of the property and the building that we're looking to raise. One note I do want to make is these are conceptual drawings that were provided by SAP. And on those drawings, you will see construction of sidewalks and the removal of a tree, and some of those elements are not included in this budget. We'll save the beautification of the property for the next fiscal year. But for the purpose of this meeting, what we're proposing is the demolition of the Harvey Jones building, an amount not to exceed $55,000. And so what will happen is we'll do some asbestos abatement. The building will be raised and we'll place sod on that property for the time being. And for those of you who weren't in the building committee meeting, the reason for this is there's some security concerns. There's no chance of us renovating or restoring that building and using it for library business. And so there's now is the time to demolish that building so we have better lines of sight on the property and say goodbye to a building that is no longer needed.
So, Aaron, just in a, without going into detail at length, what's the history of this? Has the library always owned this? Did it acquire it somewhere along the line?
So we did acquire it, and I'm going to let Susan give us a little bit of background on the history of the building.
The Harvey Jones building was an architectural firm for a number of years. And when the owner passed away and the family decided to sell the property, the library, under some agreement prior to my arrival, had first right of refusal to obtain the property so that we could control, more or less control our neighbors and what happened to the building. We opted to acquire that building, and we've never done anything with it. The intent was always to take it down.
Aaron, I didn't look. I thought you mentioned that this was in the original plan from 2017.
It was. There was like some seed money there, but it seemed to imply that it was for a renovation of the building, which it was a very small amount and wouldn't be nearly enough to bring that building up to code and make it livable.
Okay.
So yeah, that was long ago.
All right. So at this point, the building committee has, did I hear, the building committee has approved this?
Yes.
Okay.
Unanimous.
So the motion, there was one on board docs. The motion is to recommend to the full board approval to demolish the Harvey Jones building at a cost not to exceed $55,000. So we can have further discussion. Is there a motion? So someone make the motion, and then can I get a second?
Sure, I'll make the motion. I move that Finance Committee recommend to the full board approval of demolish the Harvey Jones building at a cost not to exceed $55,000.
Second, Michelle.
Okay. As I understand, this is not budgeted, correct, currently?
It isn't. And we have Jeremy with us our CFO, who can explain what we need to do to pay for this
Okay.
project. So Jeremy?
Thank you. Jeremy Wilmoth, Chief Financial Officer. Looking at the capital project fund, the budget document showed an ending fund balance of $691,700, and we are recommending today to take $55,000 from that amount and add it to the appropriation so that we don't exceed the legal allowable expenditure in the capital project fund budget.
Jeremy, I'm looking at the page that you have in the finance. I don't have the budget. I can grab the budget book, but the expenditures in the budget are 16,620,000. Does this take this to 16,675,000?
Yes, it would.
Okay.
As maximum authority.
Okay. All right. Any further questions on that? So, and I, again, you're saying, and I could pull that, but I don't have an ending balance here. On your schedule and the current month packet doesn't show that ending balance.
Yeah, we've not shown fund balance in the financial statement on the detail sheet for the capital project fund. But the budget document, I got a page number here for you. Page 40 of the budget document is the capital project fund detail statement of revenue and expenditure. And at the bottom of that, the projected ending fund balance is 691,700.
Okay, I have that open in front of me and that's correct. So you're saying that all this does is take 55,000 out of the 691 and we still end up with a positive balance.
Yes, sir.
Okay, all right. Is there any further discussion?
Just.
Oops, go ahead.
It's
Sorry.
Bob, and that was referenced in our building committee meeting also.
Okay.
Okay, yeah, this is Yummy. May I ask a question?
Yes.
Yes.
Yeah, I just, this sounds like what I think both Michelle and I have heard. Sorry about the dog. And, in the other, when we were on the building committee and we were told all the time, it's coming from this and it's not going to affect the final thing. Can you just explain how this is, maybe you can, Gordon, how this is different than in the past when we voted on things like this? It said nothing, it wasn't going to change the final amount, but then it always did. So how is this different than before?
Are you asking for a comparison between the Prop L expenditures and this? Or I guess historically the Prop L?
I'm just asking that, like before when we were on the building committee, or when I served on the building committee, this happened all the time that, okay, but we're still on budget and we're just moving this amount from here to there. So maybe I think, Gordon, that you have things arranged so it's done a little differently now. So these are actual numbers. This is not just the placemat thing in front of us, that this is that these numbers have actually really been accounted for. Is that the difference?
Well, I think so. And I'm when we get to the capital 6.6, Jeremy will bring us current on status. The budget, as I understand, the budget for the current year is for the specific projects that we had identified at, in the budget process, and that's the 14,600,000. Actually, that's I'm sorry, 16,270,000. The owner's rep 180 and the reading rocket was 170. There were no other specific capital projects that were budgeted. Okay, there is an allowance in the operating account. Jeremy, you can tell me if I don't say this correctly. If I get it here, there's an allowance in the operating budget for building maintenance, but I don't think this doesn't technically fall under building maintenance. So I think, and I think just in terms of transparency and making sure that everything is on the table, this specific cost or this specific expenditure was not budgeted, was not addressed in the budget process, and so it's being brought to the board for specific approval. That said, there are obviously estimates in the capital plan for what is yet to be incurred, and hopefully, because there's contingencies in there, there's additional interest income coming off the assets. So I'm hoping that what we spend here is covered somewhere else down the line, and we're not spending 55,000 over and above what we may have otherwise spent. But I can't guarantee that at this point. The purpose here is to say we didn't budget this specifically. So for again, just to make sure everything is on the table, is to get this specific expenditure approved.
Okay, yeah.
That makes sense. So that's kind
Yeah.
of a long-winded way. I'm sorry for the long-winded way of explaining that.
No, I mean, it just sounds like this is a real number taken from the real budget where Whereas before, when we had the place, you know,
Go about the
Well,
dashboard.
the dashboard in front of us, the numbers always made sense there, but then when it got back into the concrete numbers of the actual reports, then it didn't line up. So these are coming from the actual numbers.
And Trustee Pandolfi, these numbers that you saw in the table that was on the previous slide, they're taken from actual proposals. So we did competitive bidding on each of these components. And these were the best of the three proposals. So New Horizon, Den, Next Level, these are all numbers that come from the contractor themselves. We're very certain. The reason why we put in project contingency controlled by MCPL is, you know, things do always come up, but this is money that's under our control. So if there are some unforeseen overages, we have funds to cover it. But yes, and when we say not to exceed, that's what we mean. We're confident that we'll meet the mark here.
Yeah, and I just note that there's a $5,900 contingency in there, so hopefully it'll come in below 50.
Yeah, and my main concern it wasn't really about the bids and about that much expenditures, but when you're saying that this is exactly how it's going to affect our accounting and where we are with our budget, that's the numbers that it seems like they were always in question before. So by what you're saying, it just seemed I just want to make sure this is lining up and we're able to stay within the budget for us.
Yes, we're confident that we'll stay within budget this year.
Okay, thank you.
You're welcome.
Michelle, you have any other comments or questions?
Nope. Are we ready to vote?
If Bob has none, then I would, Bob, I'm going to give you.
No, no.
No, all right, Teresa, will you take the vote?
Ms. Michelle Wyckoff,
Yes.
Dr. Yummy Pandolfi,
Aye.
Mr. Gordon Cook,
Yes.
Mr. Robert Johnson.
Aye.
Motion carries unanimously.
All right. Okay. Next item on the agenda is to go through the monthly financials. Jeremy, guess I'll turn it over to you.
Thank you very much.
Oh, and before you go, sorry. Since three of us are online, if there are questions, as opposed to letting him go all the way through and get done and then go backwards. If you have questions along the way, chime in and we'll take those as they come up.
This is Michelle. I'm going to stay on as long as I can, but I am driving through the Flint Hills and my service is going from 4 bars to 1. So I make no guarantees.
Well, just make sure when you ask questions, you're at the top of the hill. I've driven through those.
I'll work on that.
Just for those who haven't, and probably Aaron, if you get a chance to drive through the Flint Hills, it is a gorgeous drive. So, okay, Jeremy, go ahead.
Thank you very much. We'll start with the first schedule, which is the general fund budget and actual report for the first 5 months ended of our fiscal year, which would be July 1st to November 30th. Starting with the top section there, taxes. We've collected $2.5 million in taxes so far this year. That's about $670,000 or 35% more than we had collected in the prior year. We discussed that in last month's meeting. It had to do with pilot payments. So I don't have anything to add there. Revenue year to date is $3.3 million, which is outpacing our budget of $2.4 million. Primarily because of that pilot payment and a grant that came in earlier in the year than we had originally anticipated. But overall, budget compared to this year's budget, we're on track with where we thought we would be. No real issues to report on revenue.
I have a question. Just, and it's really a reminder for me. On the revenue section, fourth line down, tax transfer / adjustment, 6.5.
Yep.
What's that represent?
So this schedule here is just the general fund, and all property taxes are collected in the general fund. However, that amount, the 6.5 million, is what the library is committed to pay for the debt service on the certificate of participation. So we show all of the taxes coming in here, and then we transfer out just the taxes necessary to cover the debt.
Good. Okay.
Principal and interest.
Yeah, thank you.
Moving down to the expenditure side, the payroll and benefits are slightly above budget. I think this has more to do with a timing issue of when payments are made. When the fiscal year was contemplated for the library, payroll was done in 12 monthly installments. As you all know, the library converted over to a biweekly pay cycle. And so we're going to be off of budget slightly throughout the year, just and the difference of those timing.
And when did that take place? That switch? Just
October, I believe. It was right about the time I started.
okay. All right. Go ahead.
Excuse me. Library materials, as we discussed last month, this is a timing issue more than an actual budget savings. Payments that have been made in prior years earlier are being delayed this year for cash flow purposes. Library programs are slightly below budget at $365,000 compared to a budget of $414,000. And then our last budget area in the general fund is the operations, and we have spent around $4 million with a budget of 4.8, so we're slightly under budget there as well. The majority of that is contingency for building maintenance. So it wasn't necessarily planned to be spent, but it's available if and when we need it on a per building basis. So all told, the revenues in the general fund are 3.3 million. The expenditures direct to the general fund are 23.6 million, which is a $20 million deficit. The transfer out, not donation, but the transfer of assets from the general fund to the capital fund of 9 million. And then the small amount of interest that we've earned in this fund puts the total deficit at 29,065,713. Of course, the library is anticipating its largest amount of revenue to come in December and January. I'd be happy to answer any other questions on the general fund.
Proceed.
Okay. Moving on to page 3, that should be the combined balance sheet, comparing the first 5 months of 2023 with the first 5 months of 2022. Looking specifically at the first 2 lines, cash and investment at cost, our current cash is 24.2 million. Last year, our cash was 34.1 million. So we've seen a drop in cash and investments of 9.8 million comparing the 2 fiscal years. You'll note that on the general fund, there's the bank line of credit. We have borrowed $3 million. As of right now, we don't anticipate that we'll need to borrow anymore. Again, this will really come down to timing. We don't know how much property tax we'll receive at the end of this week. If it's what we're anticipating, we don't believe that we'll need to borrow any more money on the line of credit to meet our obligations. However, if there's a delay in payment or if it's not what we anticipate, we may need to draw one more time. At any rate, we intend to fully pay back the line of credit by the end of January.
Jeremy, I have a question. This came up last, I think last meeting was on the deferred tax revenue, that 1,116,000.
Yep.
Which is, I guess, as I understand, that's an accrual at the end of June for taxes that pertain to what I'll call the next fiscal year. but I'm still of the view that that should be flipped off the balance sheet. And you know, and I understand what's being done historically, but we don't have deferred tax revenue as of November 30, 22. Actually, I don't believe if we collect this in June or prior for the next fiscal year, we don't have it at the end of July. So it seems to me there should be a, and again, this is a timing issue between from a June, or I guess from a July to a June issue, but seems to me that we should look at taking that off and just having a 1 year difference and move on down the road. So
there is a little bit of a timing issue. Part of it is just the way that GASB requires governments to record property tax revenue. So what you see in the tax receivable is the balance at June 30 from the 3 taxing entities of what they show as unpaid taxes to the library. Under the Government Accounting Standards Board requirements, we're required then to take what we consider to be an allowance in the for-profit world. You know, that's obviously the account for allowance for doubtful accounts. Right. Under GASB, it's netted. So we take what the principal amount of the tax owed is. We then apply what we believe our collectability of that amount is. And then that's what's required to be on our financial statements at 6/30. Since we don't get an update of that number from the 3 counties each month, it would be impractical for us to try to follow through. And so what we do, what I believe most governments do, is simply at 6/30 set up that allowance and then adjust it annually based on the new information. The difference between the receivable and what we call deferred is under our revenue recognition policy, revenues received in the first 90 days, I believe, 60 days, excuse me, of the fiscal year are actually attributable to the last fiscal year. So the difference between the receivable and the deferred revenue is the amount that we anticipated to receive in July and August. And so those 2 calculations are just done annually as a component of the audit so that we can show a full accounting of what we believe to be a reasonable expectation of property taxes, not just current, but also delinquent, and then deferring those revenues so they don't actually impact fund balance. So the net, the difference between those 2 numbers is revenue into the at 6/30.
okay, all right. Well, we're getting way into the weeds, and I didn't necessarily want to do that, but okay. I'm gonna unless somebody has questions, I'm gonna leave that alone for the time being. I still like to understand it better because to me, it's you know I think, as I understand, we're on a cash basis, and then on June 30 we make a bunch of accrual adjustments to get to what I'll call closer accrual basis financial statement, and then you have your other adjustments that come into play into the audited financial statement. So, all right, unless somebody has questions, let's move on.
Okay, the next page is looking at the capital project fund. And if I could just real quickly address Trustee Pandolfi, assuming that the full board approves the recommendation from the building committee and the finance committee, what you'll see next month in that line that's called 23-24 budget will be a new project called Harvey Jones demolition. And that's where the $55,000 will show up. We'll also amend this schedule to show that ending fund balance rather than just the net of what occurred in fund balance, so that we can have a full picture on this page of not only our budget projections, but what's actually occurring.
That would be
appreciated.
appreciated.
Thank you. Thank you. That really helps, I think, us understand and see exactly, you know, if we see it showing up in the reports, that really helps me.
Yeah. Jeremy, just, I'll throw this on. It's one of the things I wrote down is I think it would be helpful to have both on the general fund financials, and here is the reconciliation of the surplus so we can, or the fund balances, so we can see what's going on. And it ties it back to the balance sheet. So anyway, go ahead.
Okay. So other than that, there's not much to report here other than activity that occurred for Prop L. The detail of that is further down in our report. But I'd be happy to answer any questions that you all may have on the capital project fund.
Proceed.
Okay. These next ones are more just for information, showing the grant gift funds that had activity in the current period, and then a listing of all the grant gift funds that had no activity in the current fiscal period. Excuse me. And then under the line is an accounting of the revenues and expenditures for the fund. If there's no questions, we'll move on.
Move on.
The next one is debt. There's no changes here.
Yeah.
Of course, our debt payment is scheduled for February 1st.
Yeah, I don't know that we need this one every month. I think when we make a payment, that's probably when I would present this one.
Okay.
So.
And then the last one is the self-insured, self-funded, excuse me, health insurance fund, which is an internal service fund. So we're showing both the balance sheet and the income statement. Not a lot of activity.
Okay, just one clarification question, because the health plan is on a calendar year, but this is a fiscal year.
Correct.
So when I see year to date, we're looking at 5 months of activity, not 11 months, correct?
Correct.
Okay. Go ahead.
That, I believe, is the end of the financial report. The next one is 6.2, the updated cash flow projection. I don't think a lot has changed here other than we obviously have actuals through the end of November. So that amount ties back to the balance sheet. And then I don't believe we've made a lot of significant changes to the projections for the rest of the fiscal year.
No, I think that's right. I just note again that the projection we did a year ago, I'm going to say somewhere in there, that current year number was in the range of I want to say 14 million. So I'll acknowledge Aaron at the board meeting as well for doing a tremendous job of helping us manage our cash flow. Is that? That's a one-time bonus to people that pay the taxes. So, okay, keep going.
The next one is the investment report. Not much to report here other than you can see we had a few investments that sold in October, which has helped us with our cash flow issues.
Is that matured or sold?
I'm sorry?
Matured or sold?
I'm not sure what the difference is. Well, we didn't sell it early, so they matured and
yeah, okay, all right.
Cash.
Okay.
I think the next one we didn't put into the PowerPoint because it's so voluminous, but you can find it on board docs. That's the November disbursement detail. Those are all checks issued and all purchasing card payments.
Are there any questions on that from anyone? Because I don't have any at this point. If there's questions, let's move to the next.
The next is the personnel schedule. If there's no questions on that, we'll move to the capital plan. Just a couple things to note here. Still new, so I apologize, but I had originally listed the audited expenditures based on what was in the audit. Evidently, there was an immaterial restatement. Therefore, it wasn't deemed necessary by the library to restate the entire financial statement for such a small amount. So I have amended the audited expenditures to show that restatement. It basically dropped it from 117,008,000 to 117,005,000. Thus, you can see the immateriality of that. And so current expenditures tie back to what we showed you on the capital project fund report. And we've split that out here between construction and all other costs. And then the projected expenditures, we're still on target with what we've been reporting the last several months. So nothing out of the ordinary there. We did add a footnote just for your information that of the 5.8 million that is currently budgeted in these last several projects, there's approximately $760,000 that are in a contingency with J.E. Dunn, meaning that if the library has no change orders and J.E. Dunn has no unforeseen costs, that 760,000 would then not be spent. But as you know, we still have 2 significant projects going on. We have 4 in total, and so there may be some change orders between now and the finish line.
And I have a question. I know it was either prior month or a couple months ago. The contingency in the 4 projects that were running was in the range of 1.5 million. Have we spent part of that contingency? Or has that been taken out of here because we got because those projects are completed and the contingency went away? And the what I'll call the remaining expenditures.
So as I understand it, the contingency with J.E. Dunn is for the total project, not building specific. And so what J.E. Dunn does as they finish out a project, any underspending from that just goes to that bottom line, which is what that 760,000 is. And so these projected expenditures of 5.8 million agree with what J.E. Dunn has by project as well. I don't know if that's answering your question or not.
No, I understand what you're saying.
I
understand what you're saying, but the board approved specific projects with a contingency within each project. So if that project is completed, then, and that contingency is not spent, then that contingency should come back to the library. Shouldn't go to J.E. Dunn. Again, the board approved a specific project cost, and that is a line item in each project detail. So
I wasn't here, so I don't really know.
well, I'd ask I guess I'll kick that back to Bob and Aaron on the building committee to investigate that. I think that's a big number.
Yeah, that's fine. I see the note down here. Of course, now it's roughly 760,000.
Yeah, I can, but the documents are, I can resend the doc. They're on board.
Yeah, do that. Yeah, and I have no problem with the building committee reviewing this. So
yeah, I'll send that stuff to you.
Thank you.
Okay, any questions on those? Any other questions, I should say? So basically, if Aaron, you can correct me, there's sufficient assets in the capital fund to finish Prop L.
Yes. And we're relatively confident that there aren't going to be any major expenses. But I can't say for sure. There is some remaining touch-up work that needs to be done at Green Hills, which we will use contingency for. But other than that, I think we're in a good place. And all of us agree, PMC and Dunn, that we will end well above a zero balance when it comes to the contingency.
Okay. Michelle or Yummy, any questions?
No.
No.
Okay. I have no other business. Aaron, do you have any?
No, I do not.
Then if that's the case, anyone else have anything they want to bring up? If not,
Yes, I would like to say welcome back to Teresa.
oh,
Oh,
Oh, thank you, Dr. Pandolfi. I am happy to be back.
yeah, we missed you.
Oh, well, thank you. I missed
You
you
were-
all too.
You were missed.
Oh, thank you. Thank you for all the calls and texts and everything I got from you. So thank you. And I'm happy to be back. Thank you.
Okay. If no other business, then I'd ask for a motion and a second to adjourn.
I move the meeting be adjourned.
Second.
And Teresa, will you take the vote?
Sure. Ms. Michelle Wyckoff,
Aye.
Dr. Yummy Pandolfi,
Aye.
Mr. Cook,
Aye.
Mr. Johnson.
Aye.
A motion carries.